Futures Radio Show, sponsored by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world effectively manage risk. For access to free educational tools and resources for the active individual trader, please visit activetrader.cmegroup.com.
Every day, traders and investors dive in to tackle the ever-changing markets to find opportunity. Futures Radio Show is your number one source for answers to the questions that all market participants want to ask. Veteran futures trader Anthony Crudele sits down with the most influential leaders and top traders in the industry. Now, here's your host, Anthony Crudele.
Hey everybody, thanks for tuning in for this episode with Jonathan Stroot. Remember, new shows are posted on Mondays and Thursdays. You can subscribe to the show on iTunes and YouTube. If you're enjoying the show, please leave a review on iTunes. Before I play today's interview for you, I want to give a shout out to the great sponsors of Futures Radio Show: CME Group, Trading Technologies, FTSE Russell, RJO Futures, and Top Step Trader. To learn more about these sponsors and the important things they are doing for futures traders, be sure to click on their logos on our website. Today I spoke with independent trader Jonathan Stroot. We discussed how he went from working at a global macro hedge fund to becoming a full-time futures day trader, why he uses Delta Profile point and figure charts, how he trades with the flow, and Jonathan explains how a trade sets up along with his process for execution. Last but not least, we took some questions from Jonathan's followers on Twitter and how working on himself away from the screens had a positive impact on his trading performance. So without further ado, let me take you right to the interview with Jonathan. How did you get involved in futures?
Kind of a funny story in futures. So I've been trading roughly about 15 years. I got a degree in economics and quantitative finance, and then so after I got my degree, I went into the workforce. I got a job at a hedge fund back in 2009. It was a global macro hedge fund based in Fort Worth, Texas. And during that time, we had just kind of left the housing crisis, and then we were sort of transitioning over into the European credit crisis during that time, shortly after there. So kind of in between there, I had joined this hedge fund, and we were heavily involved in trading credit default swaps. So I was there for 5.5 years. And again, we traded every product on the entire spectrum, but the focus was on credit default swaps. Towards the end of my career there at the fund, this was again when the European credit crisis, Europe was imploding. The European regulators basically came out with new regulations that hedge funds were no longer allowed to trade naked positions, meaning if you were long the credit default swap, you had to be long the cash bond. You had to have an offsetting position. And we were just basically speculating. We weren't, we were speculating, of course we were, but we didn't have offsetting positions. We had a lot of directional positions on the CDS, on the sovereign debt. So basically our bread and butter got taken from us by European regulators. So we had to really kind of scramble and figure out a new strategy. And so we transitioned over into futures. And we had traded a little bit of futures, mostly just hedging our book through the S&P futures. So I had quite a bit of experience with the S&Ps. So when I did leave the fund back at the end of 2013, it was kind of a no-brainer for me because obviously as an individual trader, you can't trade credit default swaps. You have to have an ISDA with your counterparties and whatnot. So the futures was kind of the no-brainer for me.
So now you're an independent trader trading for yourself. And what futures markets are you focused on these days?
Primarily just ES and crude oil futures. The majority of my trading, I would say, is in the S&P futures. Probably, 75 to 80% of my trading is in the S&Ps.
Why those two markets?
Why those? It's just a market that I understand. I understand fairly well. It's a very good, highly liquid market. I think some of the other markets in the futures arena, you have to have a good fundamental basis to trade them, like your nat gas, stuff like that. Some of the softs, the grains, stuff like that. And it's just I think it takes a little more work. My approach. I use a lot of order flow based stuff in my trading, and I think those are the two best instruments to be trading with that type of strategy.
So day trading, intraday only, not holding any positions overnight or anything?
No. Everything is intraday. So from my past at my old fund, where we would obviously, we're a global macro fund, so we would have multi-million dollar P&L swings overnight. And back during those days, I would have a tough time sleeping at night because when, during the European credit crisis, especially, you had these central bankers and whatnot, giving, press conferences at in the wee hours of the morning. And we'd have major book swings and stuff like that. So, I got very little sleep during my time there. So I wanted something to where, I could clear my risk at the end of the day, and so it kind of helped me sleep better at night.
Talk to us a little bit about your strategy. Are you scalping? Are you holding positions throughout the day and then just getting flat? How does that all work?
Yeah, so my sweet spot. I wouldn't say I'm a scalper, but my sweet spot, as far as taking profits or whatnot, I'm typically looking for anywhere from 3 to 5 handles on a move, and again, going through my work, my trades, doing some statistical analysis on it, that the numbers tell me that is my sweet spot. And that's the one thing that I do is I do keep a lot of metrics on my trading, so I can learn from it and I see what works best for me and what doesn't work best for me. So when I left my fund, I was trying to develop a strategy that kind of worked best for me, and I started off. I would say scalping, taking 6-8 tick profits on trades and whatnot, and then over time, as I got a large enough sample size to really figure out what strategy works best for me, then I adjusted that. So I'm typically taking anywhere 3 to 5 trades per day. And 3 to 5 handles per trade is again my sweet spot, and all risk is cleared at the end of the day.
Is that purely based on technicals? I know you already mentioned that you use order flow, but walk us through how your strategy works.
Yeah, so just kind of a big picture view of it is obviously I find out which side is in control. Okay. I like to look at market structure through a point and figure, through a kind of it's a delta profile point and figure. And the reason why I like the point and figure so much is because ES is a very rotational market, and that point and figure shows the rotational nature of that. And so I'm easily able to identify which side gets it wrong. So if I could sum up my process in just like one sentence, it would be to find out which side gets it wrong, and then I lean against those traders. So I just call them basically trap traders. You'll find very frequently you get heavy selling imbalances near lows or inflection points near the lows, whatnot, and then a high amount of buying volume and people getting long. When the market gets too long and it starts to rotate lower, then those longs up there are getting trapped, right? And so I like to identify those types of areas, and then I like to lean against those traders.
So you said you want to determine which side is in control. That's your first step, right?
That is, yeah, correct, right. So if we're obviously in a super bullish market, or if we're in a super bearish market, which we obviously haven't seen in quite some time, I want to trade with that flow, because my thought process is, in the grand scheme of things, I'm a small trader, right? In the realm of who is trading the S&P futures. There's always larger traders okay, that are trading the market. And so, I don't like to be swimming upstream. And I use that analogy quite often. Swimming upstream is not fun. It's not easy. And you're putting the odds against yourself. So I like to swim with the stream, with the flow.
How long does it take you in the morning to determine which side has control?
Yeah. So again, I to determine that, I go back to my point and figure. So I use a 20 or 25 tick point and figure, and that's kind of again, I adjust it based off the recent volatility in the market, and that gives me a good idea of the price structure. So there are certain levels in certain areas at which, in my mind, one side loses some control. Okay. And so I determine what those areas, what those levels are. And if we're trading above those areas, then the buyers still have their edge.
Gotcha.
So I'm going to be leaning on the long side. Once those specific areas get taken out, then that shows me sellers are gaining an edge, and I want to start looking to trade with those sellers.
Walk us through how you would enter a trade once you've determined, which side is in control, how you then determine a stop, and then how you would then determine where you think the market could go.
So once I determine who's in control and I want to trade with that side, I go through and I create these certain specific areas, these certain levels, and that kind of goes back to what I mentioned before: finding those trap traders, finding out which side got it wrong. So I know intraday that I want to be leaning on these very, very specific areas, and I don't trade outside of these areas. And then I have a specific process of what happens once price gets into these specific areas that I'm talking about. And for instance, I want to see price trading down. I'm just going to use an example. So for a long, okay, I can use today for an example. The price traded down right above, what was it, 30, 15. And I had a zone there. I had a zone from like 30, 15 to about 30, 18, like a 3-handle zone. So I'm looking for something very specific to occur in that area. When price is trading down into that zone, I want to see sellers hitting bids. Now, most people would sit there and say, oh, well, you would, typically, wouldn't you want to look for buyers into that area? Well, yes, but not first. What I want to see first is I want to see some sellers getting off sides first. I want to see sellers hitting bids down into that zone, whether those are stops coming out or whether those are late sellers getting in, looking for a breakdown. Those are two main things that I look for when attempting to get long. Now, once I see sellers into that specific area that I'm looking to trade, once I see those sellers hitting bids, and then I start to see a change in the order flow, both on the active and passive side. Okay. And that's one thing I've really incorporated into my trading over the past year is Bookmap. I've really tried to incorporate the passive side of order flow into my trading, because the aggressive side is only looking at the delta and all that. That's only one side of the order book, one side of the picture. So anyway, so once I see those heavy sellers coming into one of my buy zones, and then I look for a change in the order flow, and that's confirmed by the delta that I'm seeing going into the market at the current time. And that's the aggressive side of the market. Then you have the passive side. I'm looking at what resting bids are doing. Are bids stacking? Are they reloading? Are offers pulling above? All those type of things are what helps me get into my trade.
You wait for the market to get to your area.
Yep.
You wait to see, to me it sounds like, and for example, on the long side, if the selling gets absorbed in your area, so you watch
Correct.
the reaction. So you're not buying in a long scenario right when it gets to your area. You're waiting to see how it trades there.
Yep.
And
exactly.
then once you see, okay, look, this is a green light, then are you basically, you have a hard stop just below that area? And then I'm curious how you determine how far it could go. You say you try to make 3 to 5 points. Is that just standard? Okay, we held this area. This is what I'm looking for.
No. So I use market generated information. Okay. So we'll talk about my targets first. I'm always using market generated information for my targets. I never, ever, ever say, hey, I'm going to take profits at three handles or four handles or five handles. I was just kind of giving you an example before of what my stats say, kind of works best for me. But I'm always using market generated information for my targets. Now, when I say the market generated information, I'm looking at there's two specific things that I'm looking at. I'm looking above. Let's just say I enter a long. Okay. At some point above, I'm looking for the next set of trap longs. Where are there longs above that got it wrong? That got their call wrong or got trapped, if you will. So I'm always going to be trading in front of those guys. Okay. Along with that, and what you'll notice a lot of times, more times than not, is the passive order flow, the passive side of the order book. You'll have resting offers up against those trapped longs. Okay. So targets are going to be, if I'm long, I'm looking for the next set of trapped longs, guys that got it wrong, or I'm looking for very large resting offers. And I'm always going to be taking profits, trading in front of those areas. Those are always going to be my targets. And it always has to be market generated information. I find a lot of times guys will, excuse me, I find a lot of times guys will just take profits at, 6 ticks, 8 ticks, for no reason. Okay. And I call that micromanaging your trade. And I think that's really skewing the probabilities and really skewing, your performance in a negative manner if you're doing that. So always using market generated information for targets. As far as the stops go, I know the invalidation point on each and every single trade that I enter. And again, like I said, I create my levels of interest that I want to transact at, and I know if price violates that area, then that's an invalidated trade idea, invalidated price. So my stop is always going to go to that point of invalidation.
When you say trapped, what immediately comes to my mind thinking about that word in markets is it sounds to me like you're looking for an area to where we could have a quick response reverting back because they got into an area that was wrong. Like you said, you watch for the sellers to come in, and then if it is absorbed in that price, it could be a quick move off of that area. Is that your thinking?
Yeah. So let's just say, for instance, let's just say price pulls back. Just to use a broad and just very clear example. Let's just say the market all of a sudden in S&P trades down to VWAP. You get a lot of buyers there, a lot of guys trying to get long, but then you have some sellers that hit it, okay, start hitting bids. Instantly in my mind, those buyers up there, there's two things that occur. One is they get stopped out, right? So that obviously pushes price lower, along with the sellers that came in and hit it. And then you have to think in your mind too that there are some longs that did not liquidate. Okay. So these guys are taking heat on their trade. So whenever you just got to think, common sense tells me that whenever these guys are taking heat on their trade, okay, and it's happened to me before early in my career. I think it's kind of happened to everyone. You start taking heat on a trade and you don't respect your stop. And there's a lot of traders out there that don't respect their stops. And if price trades back towards their entry, they're a little relieved. Okay. And then in their mind, and again, like I said, I've been there, I've done this before. The price starts trading back to my entry after I just took a lot of heat. I am more than thrilled to get out near break even. So you have two forces going on here. You have one, from that level, you do have some large sellers that hit price that knocked it down. Okay. So you're going to, and then you have the buyers that got trapped right above there looking to get out of their positions as well. So you're going to have other sellers leaning on that area, thinking two things. You either have some more large sellers with more sell interest there because sellers did get the market to go offered there, or or you have those trap longs looking to get out of their trade. So I'm going to kind of lean back on that area. Does that make sense?
Yeah. So that's what you feel your edge is.
Right. That's exactly it. Correct.
Yeah. I'm curious, how do you trade different contract sizes? Are you always trading the same size, or is it different contract size based on different situations?
Yeah, I've got what I call a social size that I've got there's certain trades, certain locations, certain instances with with different contexts, and all that aspect of it is discretionary. My actual process is pretty systematic, is very systematic. But then again, you do have a high degree of context, and that obviously determining context is very discretionary. So with that said, there are times to where I deem one trade a much higher probability than another. And again, that's just based off experience. That's based off of my just pure discretion. So I have a social size that I trade. And then if something were to occur where I deem a trade extremely high probability, then I will certainly increase my size. That's one thing. And early on in my career too, I used kind of the Kelly betting system. And then I don't know why I got away from it. Maybe call it laziness. I don't know, but that's one thing that I've constantly been trying to work on and improve on is my betting size and being a little more systematic about that. Just to because I'm always looking for ways to improve, always looking for ways to optimize my performance, and I think that's something every trader should always do. So that's one area that I've always been kind of looking in. But for the most part, it's I have my social size. And then I have what I deem extremely high probability trades that I will put on much larger size.
Hey everybody, I want to take a moment to thank one of our sponsors, FTSE Russell. They are a leading global provider of benchmarks, analytics, and data solutions. The Russell 2000 Index is a key benchmark for small cap U.S. stocks. Be sure to check out the E-mini Russell 2000 Index Futures, contract symbol RTY. For more information on FTSE Russell and their products, please visit FTSERussell.com. I want to move to life outside of trading. And okay. I want to talk about, you just mentioned optimizing your performance, how you can get better, how you're always working to get better. And for me, a big aspect of my life and my trading career, getting better didn't necessarily come at the screens. Of course, a lot of it did.
Sure.
Screen time, I think, is extremely important. But doing things outside of work. I know that you're into jiu-jitsu.
Yes, sir.
Talk to us about your life outside of trading and if that's translated into positive effects on your trading performance.
Yeah, I mean, first off, it most certainly has. I've always been one because I played Division I college baseball. And, that was kind of always my path in life, or from early age. So I've always been very performance driven. I've always, whatever it is I'm doing, I'm always trying to be the best at it. I'm always trying to improve. And funny enough, over the past several years, I've become quite close friends with several Navy SEALs, guys that were on SEAL Team 6, stuff like that. And being around these guys, I'm very particular with who I surround myself with just in social life and in all that type of stuff. I like to be around guys who are very like-minded, performing. And it doesn't have to be trading. I like guys who like to learn, guys that like to push themselves to their limits, guys that are always looking to, just really, really, really test themselves and just improve in general. So yeah, I got into jiu-jitsu a while back, and it's funny. I wish I had gotten into it much earlier in my life, but jiu-jitsu is a martial art that it's a very cerebral sport, if you will. I like to say you're playing a physical game of chess. Um, and so that has taught me, it's really, really helped me personally in trading, um, by the discipline that is required to succeed in jiu-jitsu, the patience that is required to succeed in jiu-jitsu. That's all translated to me over to the screens. So that's been a tremendous help in just all aspects of my life. But to really see it help me in trading has just been tremendous for me. And again, I'm always looking to improve. I'm a very structured person, very disciplined person. And that's one thing that, I tell a lot of guys is, obviously those, patience and discipline are requirements, absolute requirements to succeed in trading. And I tell guys all the time, take a look at other aspects in your life and do a little report card on yourself. Are you disciplined in all other aspects of your life? Because you cannot be undisciplined in just normal daily life and then expect to immediately go into the trading desk and be disciplined. It's not how it works. It'll never work like that. And so I set routines, just I live a very, very structured life. And that helps. It just helps me tremendously, when I get on the trading desk.
I couldn't agree more. I've been saying for years that when people tell me that their number one rule is to be disciplined in trading, I'm like, okay, that's great. But if you're not disciplined in all aspects of your life and your entire process, then you can't, it's not going to work out because of the things you just said. Because
Right.
if you're undisciplined in other aspects of your life and then you try to just be disciplined to your strategy, you're always going to have these moments, I think, where you're going to fall off. And those
Yeah.
are the moments that put you out of business in this business.
Absolutely.
So it's everything. And it goes well beyond. That's why I do a segment called Beyond the Charts in Trading Futures Show, because I think that it's so important. And especially you and I, we're independent traders and we lean on ourselves.
Absolutely. Absolutely. And the one thing too is a lot of guys, they'll sit there and say, "Oh yeah, I'm disciplined." They think they're disciplined, but they haven't really dug deep and really looked hard into all aspects of their life. And then I think once you do that, because on the surface it may look like you're disciplined and stuff, but there's little things, little habits, and it's having that discipline and having very, very stringent, strict, good habits, is vital.
Yeah, absolutely. I mean, the biggest mistakes that I have made in trading are when I was not mentally right in the head. It had nothing to do with my strategy. It had everything to do with me.
Absolutely.
So I want to go to some questions from Twitter, because when you were about to come on the show, you sent a tweet out asking everybody out there that follows you on Twitter some questions that I could ask you in the show. And I want to first off say to everybody out there, thank you so much for sending in all these different questions. We don't have time for all of them, but I'm going to go over a few. The first one was from Jamie at malt_liquor_96. Advice for someone looking to break into a hedge fund.
All right. That's a great question. It's not easy. It's not easy getting into a hedge fund. I had a pretty difficult time. So, I have my bachelor's degree. I don't have a master's or anything like that. And, my degree is in economics and, minor in quantitative finance. And so when I graduated, because one thing that I did not do, which is an absolute requirement, is for the young guys out there looking to get into the hedge fund business, during the summers where you want to go home and you want to party and you want to hang out with your friends, you're back at home from your second year of college, you guys need to get serious and you need to go get internships. Okay. So getting an internship at a large tier 1 bank is an absolute must. I didn't do that. I was playing baseball during my college years, and I was working to trying to just kind of make ends meet and all that stuff. And I didn't have parents to kind of lean on during the summers, and I kind of worked my way through my college. college years. And so I wasn't able to go and do a, like an internship up in New York at a big bank or anything like that. But so for instance, that, that's an absolute must when, these hedge funds, they want to know, which bank you worked at, where did you do your internship at? So that right there, I would say is number one. Make sure if you're looking to get in the business, do your internships, and you have to, you don't start looking, a couple of months before the end of the year or before the end of your second semester, right before summer hits. You gotta, it's a very, very competitive market. So you have to get that in early. So that's like one of the biggest things. Another thing is too, is, I got very lucky. I got very, very fortunate that I had my mentor, who kind of got me very, very interested and got me into the markets was a partner at SAC Capital. And he was one of the very first persons hired at SAC back in the early 90s. So I had done a lot of work with him. I had learned from him. I had kind of shadowed him on his trading desk, early on before I had finished college. And so I had him on my resume. And that right there, because when I graduated, I sent my resume out to I think it was about 92 different hedge funds. And I got calls back from probably three out of like 90 something. And so, I was a little discouraged because these hedge funds, they hire, top 10 business school, MBAs. So if you don't have an MBA from a top 10 business school, if you don't have an internship, it's going to be really difficult getting into a hedge fund. Also, what you study, your field of academics is very important nowadays. Like, my degree in economics was great. Back then I thought that was, this is superb. This is the thing that's going to get me in. Nowadays, given the quant nature of the business and the artificial intelligence out there, I would tell guys wanting to get in the business, do computer science, financial engineering, applied mathematics. Something quantitative in nature is going to get your foot in the door. Learn programming. My God, if that's the one advice I could give you, is learn programming, statistics, all those different things. Those are going to be very attractive to hedge funds. I wish I could have gone back and got my degree in that as opposed to economics, because economics degrees today are much less useful, as are finance degrees, unless it's a quantitative finance degree. So those are the kind of the top things that I would advise people wanting to get into the business.
Okay, we have time for two more. This next one's from Danny Pham at JDQ_PHAM. What are the pros and cons of being a macro trader versus a day trader / liquidity provider?
Well, I mean, I think you have pros. There's pros about doing both. There's pros and cons of doing both. You just have to figure out which matches your personality better. For me, there's a lot of guys out there, even including myself. I want to say instant gratification, instant satisfaction, but my personality aligns more with a day trader. I like having my risk cleared at the end of the day, versus when I was at my old fund, having the macro aspect, the macro approach, you're holding on to positions for much longer time horizons. So, the pros and cons are both for each. You just have to figure out what works best for you.
Next question is from ESF Trader at ESF_F_trader. Asked, talk about having a trading battle plan and executing that plan flawlessly over and over again. And then he put flawless includes getting stopped out.
Yeah. So just real quick on that, having a trading plan. Like I don't know a successful trader. I truly do not know a successful trader that does not know where he's going to operate or transact before price gets there. So taking trades just on the fly, trading by the seat of your pants, not having a plan. I think you're really skewing the odds of success against you. So I would tell everyone out there, you can ask any professional trader, any guy who's had a lot of success in this business, know exactly where you want to operate and transact before price even gets there. Getting stopped out, that's the cost of doing business. It's going to happen, and you need to have a probabilistic mindset towards your trading. So getting stopped out, and that's all that is just taking that next trade is just adding to your sample size. So if you do have an edge, you have to continually play that edge over and over and over again. Very similar to like what the casinos do in Las Vegas. They have an edge. You don't ever see those casinos shutting down. They're constantly playing their edge. So you have to do the same. You absolutely have to do the same.
The only other question I even want to mention, I think we touched base on it a little bit today, talking about beyond the charts, what we're doing outside of trading, was Knobs Trades, talking about negative energy and how traders need to understand the only control they have is over themselves. If they can't get this, chart talk is worthless. And I think that you and I discussed this, but that's a great point that Knobs Trades put out there, is that, look, it's not just about the charts. You really, if you're an independent trader, you're leaning on yourself. You got to work on mental health, physical health, the whole package, like what we talked about with being disciplined.
Yeah, I agree. I completely agree with that. I view trading as it's obviously a very performance driven profession, just like any professional athlete does. Any professional athlete out there is always priming himself to be the top performer that he can be. You're not going to sit here and have professional, sports players or whatever it may be, singers or, whatever your performance driven profession is. You can't show up, pardon my French, but you can't show up half-ass and expect to perform. So you need to always be priming yourself, away from the desk is in my opinion more important than being at the desk. You have to take care of yourself. You have to exercise. You have to, your mental health, make sure that, if you have any issues affecting you at the time or whatever, and it's okay to step away from the trading desk. The markets are always going to be open the next day. So if you have to take a few days and kind of calm your mind, calm your nerves or whatever, do so. It's fine.
Last question before we get into rapid fire. Pitfalls that you see newer traders falling into and how to potentially mitigate those.
Biggest pitfall that I see amongst traders is there's a couple of them. One, starting out, because you see it in the Twitter community quite often. The guys that are the lure of trading, and you listen, you can make a fortune in this business. You absolutely can. Guys do it. But if you're leaving one profession to another and you don't have a background in the markets and finance, or you've never worked at a hedge fund or a professional proprietary trading firm or anything like that, find a good mentor. There's a lot of garbage out there, but do some due diligence, see what their background is, but find a good mentor, someone that can take you under the wing, and kind of guide you. It's like having a performance coach. I think that's very important. The guys don't do that. They just want to go off, read a few books and try to do this on their own. And again, odds are against you in that aspect. And as far as actual trading execution and stuff like that, one of the pitfalls I see is guys have a high tendency to micromanage their trades. They get into a position, they take some heat on it, they almost get stopped out. And then once the market kind of starts going back into the money a little bit into their favor, they're quick to take profits. And I tell everyone to do a lot analysis, LOT, left on table analysis. And it takes a little work to do it, but it's really, really eye-opening if you dig deep down and see how much money you're leaving on the table by taking profits ahead of your actual targets that you set. So, if guys, you're struggling with micromanaging your trades, put your trade on, put a bracket order out, set your stop, have your target, walk away. You don't need to sit there and watch the market tick by tick by tick. You sitting there and clicking that mouse whenever the trade goes in the money a few ticks, micromanaging the trade, you're not changing the probabilities of the trade working out in your favor. They're going against you.
Great stuff, Jonathan, but we're not done yet. Rapid fire questions next if you're ready for those.
All right, let's do it.
All right, everybody, our rapid fire segment is sponsored by Trading Technologies. Access the global markets from virtually anywhere with TT. They are the world's fastest commercially available futures trading platform. And now you can trade cryptocurrency spot and derivative markets side by side. For more information, please visit tradingtechnologies.com. Jonathan, first question for you. What trader has influenced your life the most and why?
It would be my mentor, a guy I'd previously mentioned. He was a partner at SAC Capital and one of the first persons hired at SAC. Tremendously successful trader that he's been just a light of inspiration for me and has guided me, led me to kind of where I'm at now. So
what was one of the hardest things for you to overcome in trading?
Micromanaging my trades. I think that was one of my biggest pitfalls. It's something that, is something that I've always had to be aware of, cognizant of, and always just be working on to improve.
How has your trading process evolved over the years?
Trading process, the overall idea, the overall approach has not changed much. I've added a few things like again, I mentioned earlier, the incorporating Bookmap, the passive side of the order book into my trading has added a ton of value. So that's the primary thing that how it's evolved is just looking at the active and passive side, incorporating both.
What is one attribute that you believe every trader should have?
Discipline. That's the number one thing that comes to mind. Discipline.
Favorite book about trading?
Favorite book about trading? You got to go with Reminiscences of a Stock Operator. I think that takes the cake.
Favorite movie about trading?
Wall Street, the original. Old Bud Fox, Gordon Gekko. I don't think it gets much better than that.
What's the best piece of advice that you've received about trading?
Have a plan. Always have a plan. And do not micromanage your trades.
If you could go back in time and give the younger you a piece of advice, what would you say?
Best advice. Probably would go back to micromanaging the trades. If I had not micromanaged trades over the years, there's no telling I might be giving old Warren Buffett a run for his money.
If you had an elevator pitch me your edge in trading, what would you say?
Find out which side gets it wrong. Lean against those guys. It's always the side that gets it wrong that sponsors the next move. So find out which side and where they got it wrong. Lean against them.
Last question for today, Jonathan. What's your favorite thing to do when you're not working?
No, my wife is my best friend. Spending time with her and training jiu-jitsu.
Shout out to her and her new show. Congrats.
Yeah, thank you.
All right, Jonathan, where can people find you on Twitter?
On Twitter, I'm HF_trader.
And no website for you, right?
Nope, no website, none of that stuff. Just I'm only on Twitter.
Jonathan, this was awesome. Thank you so much for coming on Futures Radio Show today.
Thank you for having me. Appreciate it.
Thank you for listening to Futures Radio Show. If you have any questions or comments for myself or my guests, please visit futuresradioshow.com and sign up to be a premium member for free. If you enjoyed the show, don't forget to leave us a review on iTunes.